Boy, oh boy, there must be some big news coming tomorrow, right? We get some sloppy, choppy markets in front of us tonight. That's all right, though. In tonight's video, I got a pretty good game plan. I think by the end of the video tonight, you'll have a pretty simple game plan to make some money tomorrow. We have a lot to cover tonight. We got some more big earnings coming tomorrow. Got a ton of range-bound markets on the charts in front of me, and I'm going to cover all my favorite trade setups for tomorrow. That way you have a game plan to make some money on what might be a wacky Wednesday. I'm going to cover all the details in the video tonight. Before we jump in and get the game going tonight, make sure you subscribe to our channel. That way you don't miss tomorrow night's video. And if you enjoyed the video tonight, as always, hit that like button. Give me a shout out. Give me a holler in the comments section below. Appreciate you guys tuning in, supporting this YouTube channel. But where are the best trades setting up for Wednesday? Enough of the intro, Joe. Where are the best trades? Boy, everything is pretty ugly right now. There must be some big news coming out tomorrow, right? We get earnings coming tomorrow. Range on the S&P, range on the Nasdaq, range on the crude oil. But I'll tell you, things are pretty messy right now, but we're kind of still sitting right on those breakout pullback areas that we talked about 24 hours ago, right? So it's pretty ugly. It's pretty bearish, of course, right in the short term right now. But I'll tell you, a lot has changed, but a lot of it stays the same from tomorrow. From what we know right now, bear traps, baby. That's where probably the big money be made for tomorrow. Bear traps below the lows. Would love some bear traps below lows on the really across the board on all three of these. And you know we got those big blasts higher, right? S&P blast higher today. NASDAQ blasted higher. Bear traps on the way higher. Now, there could easily be some bull traps up here too. So we got to make sure you guys know how to get in on this, how to stay out of trouble if we do end up getting that squeeze, right? That pop up that we anticipated today. So we got a lot to cover on the S&P and NASDAQ. I'll give you guys a good roadmap on this as well. And oil I'll tell you, oil is littered with potential bull traps up here. We got a very specific game plan if you want to be a buyer on the oil. Oil, again, is still sitting right on that breakout pullback area. So buyers are not out of the game yet, and you'll see why, how to profit from it here tonight on the video. Now, before we jump in and go over all the bear traps and all the setups I'm tracking for tomorrow, let's all get on the same page tomorrow. We got a couple things on our radar for Wednesday the 19th. First of all, we got the weekly inventory report on crude oil. We have to make sure we trade around that tomorrow. Think about 10:15 to 10:40 sitting on hands around oil. You want to get to trades early on a Wednesday morning if you're trading oil. Tomorrow afternoon, beige book at 2 o'clock Eastern time might be some of the best catalysts we get here for tomorrow. So definitely keep that on your radar. And again, don't forget, we do have earnings season in not high gear, but we're getting there, right? Next week, of course, will be peak week for earnings. It doesn't look like we have much to worry about tomorrow morning. Not a lot of big names. Obviously, Morgan Stanley, Baker, those are decent names here. But obviously, everyone's going to have their eyes on Tesla earnings, IBM, Alcoa, right, towards the end of the day here tomorrow. That may lead to some choppy price action as we get deeper into the session tomorrow. You got to think people are definitely looking out for that Tesla earnings tomorrow night. We'll cover this more tomorrow night, but please be aware, right? Please keep in mind, at the beginning of the day, at the end of the day, we are susceptible, right, to some of these wild swings we saw here today. So keep that 10:30 oil report on your radar for tomorrow. Beige book tomorrow afternoon. And we're going to probably get some surprises, right, with those earnings reports. So you better make sure you join us tomorrow in the trade room as we navigate what obviously was a pretty wild session here today. All right, back to our charts, though, because, of course, the money is made on the charts. I'm going to go through each one of these markets right now and talk about my favorite trades. If you like making money, I would definitely make sure you watch all the way to the end, because every trade idea I talk about tonight can be applied to your favorite market. I will find a way to work it all together, so I'll give you a reason to stick around all the way to the end. We'll start with the S&P 500, S&P and the SPY. We'll go to the NASDAQ and the QQQs, and we'll wrap it up on the oil futures and the USO here tonight. As always, guys, these are tick charts up upper left-hand corner, all of these time frames are tick charts. That is the 21 EMA, the exponential moving average. And as I always remind you, I provide 60-minute time frames, 4-hour time frames linked up in the description of the YouTube video. I like to use those 60-minute time frames specifically to give me a directional bias. I find that when you go with that directional bias of the 60, it gives you better chances of getting lucky, better chances of catching big winners, and it kind of makes easier sense to find the best trades each day. So if you want to see more examples of kind of the lens I'm looking at here tonight, definitely check those links up in the description of the video. Knowing that, what is the most important factor here right now on the S&P? Well, boy, there's a lot of key components here. Really, in my eyes, the biggest one is we have an overall bull bias still. I know we're pretty bearish in the short term, but we're still pretty bullish overall on the 60 minutes. So I'm going to try to filter my trades. I find that even though you might not get big winners every day, if you stay focused on that long-term bias, you're going to get lucky more often. You'll get into those better trades more often. So we're definitely still bullish overall. The most important thing in this chart, though, is this strong move up. You know, anytime we see a strong move in one direction, we expect to see a pullback and a retest of the high, right? So we're looking long still. And really kind of the second big component here is if you watch last night's video, we talked about how we were anticipating that breakout and that pullback. And, you know, I would have liked to have gotten that squeeze right back up to retest the high. Didn't get it today, but we have to think that that's what the buyers are still hunting for right now, right? Trying to go back up and retest this 98.25, right? On top of that, we got ranges everywhere. Range here, range there. Why is it important? Because ranges act like magnets. That's one of the big reasons why a bear trap below us is really one of my favorite trades here for tomorrow. I would love to, as we go lower, if we go lower, there's not a lot of easy places to sell short. You've got rising support trend lines, range lows. So I like to trap some of the bears in, maybe a bear trap set up, right, to buy off the low. That should be a pretty easy one. That will be my favorite trade for tomorrow. So we'll talk about that here in a little more detail. I'll kind of flesh that out for you as we go. The hardest part is going higher, right? Because, you know, this is a pretty strong move down themselves. Now, I will say, right, strong move down, they did retest that low. So now we have the green light now to make that move back up to retest the high. But we're pretty bearish in the short term. And so we have to assume that, you know, above all of these highs up here, we have to assume there's more bears waiting for it. And so we talked about bear traps. Well, this could easily be a bull trap. Now, I'm not a big fan of trying to sell that bull trap because you've got rising support trend line, overall bull bias. You know, again, if you try to focus on going with that 60-minute direction, you might miss some trades here and there, but you're more likely to be on the meat, right, of the move each day. So as we go higher here, we really have to try to trap in some of those bears, right? If we expect to have sellers coming in up here, it's all about, exactly right, it's all about bear traps, right, as we go. Can I trap those bears in and then use their stops ultimately as fuel to run back up to retest the high? Now, anytime we see a strong move that retest, that opens us up to a reversal back down again. So I definitely have my eyes on a move going up to those highs and then possibly a crown reversal pattern right off the high of that. And we'll talk about that more as we go deeper into the video. So there's plenty of ways to make money in this situation tomorrow. We definitely have that variable of the earnings season right now. So, you know, there may be some there may be some surprises here and there, but that's all right. Tomorrow morning we'll iron things out in the trade room. The most again, my favorite trade is I'd like to go lower. The problem if we go lower is that momentum now is going to be pretty bearish in the short term. Again, we're still going to be, until something really, really drastically changes, the 60-minute chart still looks pretty, it's going to take a big reversal to really get that long-term bias to roll over. So I like the idea of buying down here. And the way that you want to do it around these lows is because this momentum is so strong, well, as I always say, when you have momentum at your back, when you're going with momentum, you can get a lot more aggressive. When you're going against momentum, like in this situation would be, you really have to use the other side of the market to fuel the reversal. And this is where crown reversals come in, two-try failures come in. So as we pull back now, because I don't have momentum on my side, I want to look for, now in my free trading course, we learn about failures, right? Failures are kind of my bread and butter in range-bound markets, right? So range up there, that will act like a magnet. Because that momentum is so strong, we're going to want to see two tries, right? So two tries from the bears, and really ideally, you're going to want to try to get in as low as you possibly can here with what I would call a two-try failure with a trap or a crown reversal pattern, right? You guys are learning the basics of this in the free trading course, right? It's basically a two-try failure, giving the bears the benefit of the doubt because we have that bear momentum, and then using their stops, right, as fuel. Now, let's face it, probably the best possible scenario is to get a really strong rundown and either get like a crown reversal with the bears trying twice, right, and then back up, because then at that point now, this range above you is a magnet, and we can probably end up going in and grabbing a new channel. This is where a really deep, sharp move lower will be very nice here, right? Sharp move lower, and then I could use really any of the entry patterns, right? So a two-try failure, but again, crown reversal, and again, you guys are learning this, right, in the free trading course. And then as we go higher, I'm then looking for a bear trap pattern, like this one, looking for a failure pattern, right, a pullback combination, any of the setups you guys are learning in the free trading course, which reminds me, I know that most of you guys have taken the free classes. You're learning all these entry tactics right now. But if you haven't yet, if you're one of the few folks watching who haven't taken that free course yet, I'll drop a link up there for you in the upper right-hand corner. The strategy you'll learn in that free trading course will teach you a simple trick to know exactly where the best winning trades will be each day, and I'll make it easy to start making money with that stuff. I'll teach my 4 favorite entry patterns. If you're taking too many losses, if you're missing too many good trades, definitely grab that link that popped up there. Take that free class. You're going to love it. I have a lot of students right now doing really well with that free course. Another thing to keep in mind too is if we do go lower, right, don't be surprised if they pull it back, they retest that low. And again, it could happen here, it could happen here, right? Now, if they do retest that low, right, strong move down, may get retested, I would love to now go in, same thing, right? Bear trap. 2 tries. Remember, you want 2 tries here because at this point, we're so bearish in the short term, right? The only reason why I'm looking long in this situation is because we got a range above us. And of course, we're overall bullish, right, on the 60-minute. So knowing that, right, now I can use their stops as fuel, right, and punch it back higher again. So these are how I like to use bear traps as we go lower, right? Either one shot down, trap those bears in up, or let it go up, retest the low. Again, 2 tries, keep using those stops as fuel to buy off of that low. That is my favorite trades here for tomorrow. Now, if we go higher, right? This is where things get a little more spicy, right? Because now the big concern is we know where the market wants to go. The big concern though is there's not a lot of reward up here, right? If I can get long down here, there's a ton of reward here. Very desirable place to be a buyer, right? You're at support, below a trading range, overall bull market. That's a great risk-reward ratio right there for a squeeze going higher. If we go higher, I'm losing that, right? I don't have that. I don't have the ability now to risk small, to earn large, and it would not surprise, I don't think, anybody if we shot higher, ran into resistance, and then punched right back down, and then got that bear trap at that low. So you've got to be careful with that. Now, maybe you're asking, well, why can't we short that? We don't want to short that because we're overall bullish. You're more than welcome to try to short that, but again, if you try to follow that long-term momentum direction, you'll be on the right side of the market more often than not. You're going to miss some trades every once in a while, but it's worth it, in my opinion. Right? In the long run, you'll make more money because of it. That way, you're not being tossed around by whatever the short-term momentum is on the chart. So as we go higher, I have to anticipate, right, bears coming in. What I really want is I want one of those 2-try traps, right? I want to see us pop up. I want to see us push a little bit higher here, and I want to go looking for traps here. This is the only way to get long on the way higher here. It really is. It's the only way to basically use the bears against themselves and get in at a low enough price to make the risk reward worth the trade, right? So as we're going higher on the way up to retest that high, I'm looking for traps, right? Now there's also possibility here that we may end up really squeezing and running and running and running. If that case happens, right, we'll then begin to, well, as we mentioned last night, right, what do we talk about? Big breakout, wait for the deep pullback, right? So if we get something like that, we'll still keep looking for those bigger channels, right? Those deeper pullbacks, getting underneath the moving average, right? Trapping those bears in. It's almost identical to the game plan that we talked about last night, right? So if we do end up really ripping higher here, I'd love to get in off some bear traps. Simple trap patterns, right? Trap pattern, just you guys are learning in that free course, right? So simple trap patterns we want to get before we go back to retest the high. And if things really start getting wild up here, the next big objective is that 21, right? 42.21 and then 42.43. That's quite a bit to bite off here for tomorrow. But if we end up getting that real big run up, remember now we start looking a bit larger, finding bigger channels, and we'll know more tomorrow, obviously. Waiting for that deep pullback, getting underneath the moving average, potentially using these prior highs, right, as support, using things like failure patterns below the 21, right, pullback setups, right, and so on and so forth, right? So that's kind of the idea as we go higher here, all right? Now, I know what you're thinking now, right? How do I sell off the high, right? How can I sell this thing off the high? Because you got to think that's definitely a possibility here for tomorrow. Let's talk about that, but let's go do that now on the NASDAQ. The NASDAQ looks a little bit more ripe. They both look pretty ripe for the reversal. The S&P, though, is quite bullisher, right? More bullish, whatever you want to call it, right, compared to the NASDAQ. NASDAQ is more of a mixed bull market. I wouldn't quite say we're a bear market yet, but we're definitely being tossed around quite a bit as we saw here today on the NASDAQ. The most important factor, and again, we're going to talk about the game plan here on the NQ and the QQQs. The most important factor, the three big components that you have to think about right now on the NASDAQ is, first of all, very strong move up, right? Big move up. You got to think, right? Buyers have one thing on their mind. Anytime we see a strong move like this, we're going to pull back and a retest. Now, given that pullback was pretty deep, right? But it makes sense when you think about what we talked about last night on the video last night. This is that trading range, right? Now, given I talked about this area right there, but okay, they sank down into the range themselves. So I know it seems pretty bearish right now, but if we're talking breakout pullbacks that we did last night, we're still very much in the ballpark on this breakout pullback. Now, this is where things get interesting. It's clearly a very bearish market into a trading range. Now, if you've taken my free trading course, what does a bear range tell us to do? A bear range tells us to find resistance levels above the range and what? And trap buyers in and sell back down in. So just like on the S&P, if we go higher here, we really have to be careful not to fall victim to that bull trap right up there around those highs. This trading range, much like that kind of collection of ranges we saw on the S&P, really is what opens the door to, again, one of my favorite trades, which is that kind of bear trap snap low, right, and then back up here. So I still like that in the NASDAQ. I think the biggest hurdle we have on the NQ is simply getting through some of these areas up overhead. It seems like the S&P has a little bit more, obviously a little more bullish momentum on this to punch through it. NASDAQ might not be so much. All right. So let's kind of go over these relatively quickly. One thing I want to talk about in the NASDAQ, which I didn't cover on the S&P, is a possible V bottom off the low. I forgot to mention this on the S&P. This can also apply to the S&P. We talked about a crown reversal, a two-try failure back up again. If we were to, for example, right, get a strong shot lower, that V bottoms off of that low, oftentimes these V bottoms will kind of grind up. There could be a lot of buyers down there. So if that's the case, we'll look for a channel off the high, a channel off that low, right? traps, right? Find prior swings. And again, bear traps, right? Bear traps you're gonna have to look for that bear trap because we're gonna be pretty bearish, right, overall. And so as we go higher, there could be some channels coming down here. I don't want to be buying it as I go higher. Remember, when you're trying to turn things around like we're doing right now, right? When you're trying to turn this thing around, bear traps are your bread and butter because you've got to anticipate those bears are trying to short this thing because the short-term momentum is so strong. Remember, think about where the stops are, right? If I can get into something, we can get into something off that low channel, right? Trap setup, failure setup, same patterns you guys are learning in the free video series, right? Then we can use those stops as fuel, right, to punch this thing back higher again. So keep that kind of third scenario there on your radar if we do jackknife going lower. I also think too, as we go higher, the key will just be we have to get a clear, what I say in my trade room is a convincing break of this, right, of this area, right? So I'm not going to want to buy as it goes higher here. Now it does look like the buyers should try to rotate higher here, get that pendulum swing as we call it, and that may end up punching us higher here. We may see this strong move pop up, this shallow pullback, this higher high in price, and we may get that trap. But again, you're going to want to get this. There's a very small window you can see in this one, right? This is one of the challenges we have with both these markets right now, especially the NASDAQ and especially oil, right? We have to get enough of a push higher, right, to again convincingly get through some of this resistance, but not too big of a move, right? So we don't take out that high. So it needs to be somewhere kind of right in that area. And if you're wondering, is it always? No, it's not always as hard. It's just we got some earnings reports coming out. I'll put it this way: if you can make money in these environments, I can't say bulletproof, but you're well in the upper crust of traders. The key is those bear traps, right? The key is anticipating bears coming in and then trying to use their stops as fuel with some trap setups, right, as we go higher here. All right, last thing I want to talk about, I know I've kept you waiting on this, is if we go back up to retest the high. Can we all agree, great place for profit target, right? I mean, probably the best place for a profit target, but a horrible place to get long, right? You wouldn't want to get long up here. Okay, the buyers would have to give us a convincing follow through those highs. And even then, right, you wouldn't want to buy high. Look what's happened the last few days, right? Every time we see those big pops up, what do we get? We get deep pullbacks, right? So we're going to be very careful, right, trying to buy this thing as it goes higher. We hope we get is this, and again, this goes for the S&P as well. If we do end up getting, again, bear trap going higher, we find our way back to these highs now. Now let's see if we get some rookies stuck in here. Okay, great place for a profit target. If I can get the buyers now watch closely. We talked about a crown reversal to low, right? If we go smashing lower, right? One try for the bears, two try for the bears, and then get that bear trap. And the reason why you want that trap low is because you have to think that bears are going to be coming down here and you want to make sure you're buying as low as you can, right? Anyways, so we go higher here now. We run right into that high. We take the high. Mission accomplished for the buyers, right? And now we wait, okay? Now we wait for the buyers to come in and start to chase it, right? Now, remember, who's buying up here? Who would be buying this area? Rookies, right? These are not the pros, right? Pros are buying down here, right? Pros are buying bear traps on the way back up. These are assumed to be rookie traders, right? Inexperienced traders, FOMO traders, people who can't keep their impulse control, right? So what I do is remember, momentum is very bullish at that point, right? If I want to turn things around, okay, I can't just sell high. I have to use the opposite side of the market to give me some sort of edge, right? So as those buyers try a couple times now I get, again, I call these crown reversals, right? These type of patterns off the high. You can see one right here, right? There's one right there in front of you right now, right? We run up, a little bit tough to see, right? On a faster time, from it stands like a sore thumb. Buyers come in, they try once, they try twice, and there's that crown reversal. Now, I'm not a huge fan of a crown reversal on a big move like this. Oftentimes you'll get good signals, they'll keep on going, right? I'm not in the business of picking tops, right, in a strong move like that. However, though, when you have a strong move like that which gets retested, right? Now that's mission accomplished, right? That is the bullish objective in the short term, right? In the medium term. And so in this situation now, yes, right, if we can get some rookies roped in here and think about, okay, if I can get a good, now remember the key here is you have to sell a high, right? You've got to sell as high as you can in this situation. Why? Because think about what could happen here. There could be a new channel coming in, right? And that channel could be sitting right there. Remember, we're overall bullish, okay? We're not a bear market. So we have to think that buyers could still be trying to buy, but buy nice and low. Okay, sometimes these things will hit that channel, they'll rip right higher, right? They'll rip your head off. So what I want to do in these situations is I want to already be in the green on this trade, okay? By the time we get to that channel and the potential for this thing ripping higher, I want to already be target one, stop to point of entry, and then it's a freebie trade, right? If you're right, you're right. If you're wrong, it's a scratch, right? Or it's a small profit, right? It's a cup of coffee, right? It's a steak dinner, right? So that's the reason why when you're trying to turn these things over like this, and again, it may keep on going, right? And we start finding that new channel. But when you try to turn these things over like this, you really have to make sure you're selling as high as you can. And the way you do that is a trap pattern, right? Traps are always the best. And again, if we take that high out, if we pull back, right, to that moving average, and we don't try once, twice, fail, and this thing just pulls back and blasts, right, and starts to rip running higher, okay, what is that now? It's a strong move in one direction. So what do? You look to buy a pullback. And again, as we're going higher, right, as we're going higher, making our way up into that next bullish objective, could we look for trap entries? Absolutely, right? So as we're going higher, right, we're getting a little too high up here. Okay, look for traps to make sure we're buying as low as we can. And then once we start running into big objectives, and you'll see those 60-minute time frames, the 4-hour time frames linked up in the description, you'll see where those next big levels are overhead. Once we start getting up around those levels, okay, now back off. Now let's find some bigger channels, right? And again, this is a pretty extreme case here today, right? But now we look for that deeper pullback. Those deeper pullbacks give the bears a lot of momentum. We let them try a couple times, and we try to buy in those stop losses, right? So a lot of the same game plan we've been talking about here so far this week will apply if we continue to see that move going higher. It's tough to tell how much of this we're going to get tomorrow because, again, we've got some big earnings, right? That Tesla earnings, even though Tesla is not a NASDAQ stock, it's still pretty much a tech company, right? So we definitely anticipate that to be a big part of it. And this is why we anticipate. This is why we visualize and rehearse different strategies, right? Because it's tough to really predict in a situation like earnings season. All right, guys? That way, when you go over different scenarios, you get a game plan no matter what happens on this. All right, last but not least here, on the crude tonight, oil is very similar to the NASDAQ in the sense that we're bullish, but we're not that bullish, right? The S&P is still pretty bullish overall right now. The NASDAQ, pretty mixed, right? They're pretty back and forth. The oil too, right? Oil, the buyers are holding. Remember, we talked about breakout pullbacks last night, right? For the most part, we are now given, I will definitely give the bears a lot of credit on this. The bears were able to get all the way down to the other side of that trading range. So we're at the tipping point really right now, right? We're at the tipping point right now. Another down day tomorrow, and it will be difficult to call this a bullish overall bias on the 60-minute chart. Okay. Now, with that said, it's not easy right now to find a good short trade unless we end up going higher here. And here's why, right? Much like the NASDAQ, we have a bear move down into a range right now, right? So what ranges love to do is they act like magnets, right? Ranges are magnets. What ranges love to do is they love to break down and snap back up into that trading range. Now think about where you are underneath that range right now. You're right around those key lows, right? Where buyers, you have to assume that buyers are drooling over that area, 79, 79.5, even to 80, right? So we're definitely pretty bearish in the short term right now, but it's very difficult if we go lower. It's very difficult to want to be a seller down there, right? Again, I get it, we're pretty bearish, but I love the idea of a bear trap, a crown reversal back up here on the oil, okay? Just like the S&P and NASDAQ, that really is the best place to look for longs tomorrow, but it does come with a price, right? The price is momentum, and that's why that crown reversal pattern, right, or that or a double bottom reversal pattern is going to be on my radar, right? Or that V, right? That V bottom, right? Pop up, grind, right? And then still looking for those bear traps, right? Off of that low, all right? And I know I'm kind of scribbling right now, right? But I have a lot of examples of this inside that free trading course. So I try to go through this as quickly as I can so you guys can get the gist of it, all right? The hard part, just like in the NASDAQ, is going higher, right? You have to think, and we talked about breakout pullbacks last night on the YouTube video, right? So kind of a slightly bearish move into a range. You really can easily assume if we do go higher here, you have to think there are bears waiting to short this thing right back down again. Pendulum swing, right? Coming off the low, up around the high. So you have to think really this area for the most part, right? You got to think that area is potentially kind of a brick wall for more bears, right? Now, if we can kind of poke our heads through it, if we can convincingly break through it, now we've got some pretty wide open space for the move back to those highs, right? So same general idea of the NASDAQ, right? If I can get a convincing pop through it, strong move, shallow pullback, higher high in price. Okay, now I can go out and find a bear trap entry, right? Again, simple trap pattern. We call this 2-try traps in my trade room. Again, through this area, but not too high, right? Not too high. Believe me, I'm with you on the fact we are definitely threading a very tight needle here. That's unfortunately the way the market is setting up right now. Probably the easier one would be if we popped up and begin to grind, right? Grinding is what happens when you get short squeezes, right? The bears on this side of the market realize they're wrong, they get out, and the price doesn't need very much to float higher. In that situation, we draw that trend line off the high, mark that channel off the low, and then all we're doing at that point is find swings, right, and grabbing things like bear traps, right, off the low, or getting below the 21 moving average, looking to trap the bears in and use their stops as fuel for a failure pattern. As you can see, I'm a big fan of roping in the other side of the market and trapping them, right? That's usually some of the easiest way to make money consistently, right? Rather than buying high, wait for the pullback, trap the bears in, and then run right in the direction you want to go in. And we know where the market wants to go. It wants to go back and take out this 83.40 area. Now, how would I sell this thing, right? How would I sell it? It's a good question, right? So if we go higher, if we're anticipating a move higher here, right, could I sell this thing? You can, but it ain't easy. And here's why. There'll be a rising support trend line right there. Okay, this is a big barrier for the bears right now. And also, too, remember, we're still we're not incredibly bullish right now with that, the last couple of days going lower, but we're still leaning towards the buy side. We're more bullish than bearish here, at least for now, right? At least for now. So the only real easy way to get short on this is we're going to have to get underneath that trend line and use it, okay? Which is a big feat. That's not easy stuff. Now, a lot of times what these look like is they'll do this. We've talked about these 2-try failures, right? So buyers try once, buyers try twice, and they hit the channel or that trend line like that, right? Sometimes you get lucky. It's a trap above that high. It's a crown reversal, okay? But you have to make sure, though, 1 try, 2 try, and you want to clear that trend line, okay? That's really the only way to do it. Every once in a while, it'll go like this, where it'll collapse back down like this, and you're going in for that trap here, right? But that is not a very desirable trade because you're selling pretty low at that point. So the only real easy way to short this thing, like I said earlier, is to go higher. And even then, it's not that easy, right? So again, I'm with you. The bears definitely have, short-term control of momentum right now. I think the best possible scenario is we can get this thing to spook running lower, right? Trap some of these bears who are now chasing it and back up into these ranges. Same idea we've talked about on the S&P and NASDAQ as well. Or if we can get a convincing pop up, right, start getting through some of these key levels of resistance. Again, nothing different here, right? Same game plan pretty much on the S&P and NASDAQ. Then we can start looking for, entries here, bear traps, right, channels, trying to get in as low as we can, right? Because that needle, the eye of that needle is so small. All right, guys? All right, not an easy set of charts tonight, but hopefully you can kind of get the grip, right? Hopefully get the gist of looking for tomorrow. And I'll tell you, an evening like this, an afternoon like this, really illustrates kind of why our trade room is so valuable because a lot of stuff in the markets right now, right? Got some big news tomorrow, but tomorrow morning. Right, we're gonna put the game plan together tomorrow morning, and we'll trade the plan with all of our students in the morning trade room. Come on, join us. You're gonna love it. I'll put all the membership links, all the free course links. I'll put all the higher time frame, 60-minute, right, 4-hour charts linked up in the description of the YouTube video. If you have any questions, if you need any help on getting registered for the free classes or anything, right? Don't be afraid to call the office. We got live chat there as well. So don't be a stranger. If you need help, just reach out and ask for it. Be happy to help out any way we can. All right, guys. Hope you learned a bunch here in the video tonight. Remember, bear traps, and traps, and we'll see how we end up tomorrow morning in the trade room. As always, be well, be nice to each other. My name is Joseph, and we'll see you guys next time. Adios, amigos. Bye-bye for now.